Just want to double click on that, and then let me pull up the chat box over here. Just so let's see. Bernard says, curious what you recommend. I sold 50% on Friday, betting on a possible shutdown. Do you think the stable Amazon, Microsoft, etc. are good to buy on the overall dip? We will address that today because I would like to share with you, Bernard, like my take on just like broader market conditions and how I'm anticipating a bounce. And so it might look like a bounce because, well, we're not technically in a bear market yet. A bear market is when the indices are down over 20%. We're not necessarily down over 20%. We're just down 10% from the highs, right? So if I go to the S&P 500 right here, I mean, folks, this ain't bad. I mean, a lot of people probably think this is bad, but this ain't that bad. Um, Wow, I'm loving the early attendance here in the first 5 minutes. You guys really want me to share the idea. Okay, cool. I like that. Yeah, I mean, if you measure it right here, right? I have the measurement right here. We're only down 10%. So we could bounce right here towards the 200-day moving average. So if you're looking to buy next week, do you expect a further rebound on Monday? I I was actually going to look at the breadth. Let me show you the breadth real quick. So we also want to gauge the market breadth, right? Because when this thing is oversold, there's a tendency for the markets to bounce. And so if you're trying to play tactically next week, so you can see like we're below this green line right here. So typically when we're below this dash, this green dash right here, there's a tendency for the markets to bounce, right? So we could have like opening week flush and then midweek institutional rally. What I saw last week, I was kind of on Friday, I was thinking like, huh, it's Friday. It's almost the end of quarter. Institutions got to perform. Tesla's down over 40% year to date. S&P and Nasdaq aren't positive on the year. Trump seems to be pretty bullish, but then there are trade wars and all that stuff, tariffs, etc. That could just be like noise. Money printer to me still goes burr. Interest rates are already high. I think we want to bring them down. AI is like quite a bit of a narrative. So I was just thinking about those, and I'm thinking like, okay, I think we're probably due for a bounce here. Like things are looking kind of oversold. So in terms of near-term opportunistic plays, I think there's a imminent bounce within the next week or two here, right? And then we could also look at seasonality. We're also going to be moving into, well, let's pull up seasonality real quick. Seasonality SP 500. Again, these are powerful charts that I'm sharing with you folks over here. Uh, and I love these charts by the way because it helps me navigate because if you're really pushing yourself to do active trading, check this out right here. So the red is where we currently are, and then the blue is the 30-year back test, right? So the tendency in March is positive, but we're not positive right now. In terms of like what happened the month of March, we basically just sold down pretty hard here because of the whole like tariffs and stuff like that. But I think this overselling action, we went as low as -6% on the year, and then now we had a big push on Friday, right? So then the question is like, is there continuation going into next week? And if we do, how high do we bounce up until? I think for me, one of my main focus trades right now is Tesla. Because Tesla, I saw that 14%, 15% one day wonder. Did you guys see that? Like, was it last week? Yeah, it was last week. What am I saying? Too many things going on in my life. That one day wonder right there. You see that red candle right there? Okay, there's red candles everywhere. But let me point specifically. You guys see this red candle right there? So I filled positions. Well, I had a tranche already, but I added another tranche. So 220 ATM strikes at the money strikes. Well, at the time it was kind of at the money. 220 and 230 strikes. I have leaps on those. I'm holding basically next year's, right? January 2026. Those contracts were not cheap. They're like $6,000-7,000 a contract. Five, seven, within that range. But I also had weeklies as well, and I was playing zero DTEs on Friday, thinking that 250 line was going to break. But it's hilarious, right? If we zoom in on Friday, look at this 250 line right here, right? I mean, I drew the line right there. This thing broke out, tried to run, but then it came back down. But then look at how it closed, and after it closed, it just got pinned at 250 right here. So I could see that there's interest in trying to push this up, and this could be a nice, bounce trade. But again, this is something that we need to clarify, right? It's not the typical condition, like low volatility condition or market modality where we could just hold and swing trade. It's more of like high volatility or elevated volatility. I wouldn't say high anymore. Volatility went down a little bit. It's elevated volatility, and it's kind of heading down. So I think, maybe a chance for a bounce here. So if you look at a bounce, the pink lines right here, it's my quick Fibonacci retracement right there. The typical bounce tendencies. Look at this. The 23% right here. The 23.6% right here. It's like right on the 200-day moving average. Isn't that beautiful? I did a swing high, swing low, right? Again, this should be acceptable in terms of Fibonacci retracement drawings, I would say. Acceptable to, again, you want to make your drawings, like your support and resistance lines, acceptable to the majority of market participants, right? So to my understanding, this is acceptable in terms of what the market is likely to draw, right? From swing high to swing low over here. And so the 23.6%, again, the two areas, the numbers that typical tendencies would be this number right here. I know you can't see it. I can't see it either, but that's 61.8% right there. And now I messed up my drawing. 61.8% is a tendency. I mean, if we can get to that line, that'd be fantastic. That's 61.8 up here. But if we were to retrace on Tesla, right, the first test right here, and we already broke this channel right here. So first test would probably be here, right? And then, likely scenario is we bounce to that 325 area or 321, which is 38.2 right here. So that's a nice bounce trade right there. Just saying. I mean, if you want to go after something like that on Tesla. We're going to talk more about this. And I mean, we got so much to talk about today, and things to do as well, knowledge to basically derive from the marketplace. I'm going to be going over Redpoint Ventures report that I saw this week. I thought that was pretty fantastic on their opinion on the marketplace. And then I'm going to dive into CoreWeave, which is one of the bleeding edge, NVIDIA invested GPU companies, GPU clouds on the planet right now, because they have intent in going IPO. Ooh, isn't that great? We're going to learn so much today. It's gonna be fantastic. What else? And then I wanted to share my idea as well. So that's something I want to do maybe like shortly here, because I think as a group we could potentially pull this off. This idea. Let's see. Edward says about Tesla weekly trade. It's a risky trade, isn't it? Unless Monday gaps up, the weeklies will lose a lot of premium. Yep. It is exactly that. So I've been in these scenarios before, Edward, where it's like it's annoying because it's like super red on the day, and we're just about to close, or the market's about to close, and it's not giving you any evidence of like where it could potentially go next, right? It's not above 250. It closes right at 250. I hate that. But I'm taking a chance on on those weeklies. So I have next Friday expiration. They can expire. They could be worthless, but my bigger trade is actually my leaps. I mean, those leaps are expensive, man. It's like 5 to 7K per contract. So yeah, like those weren't cheap, but let's play. Let's see how it goes. So my thinking is that if I'm wrong on the weeklies, okay, I lose a little bit there, but I'm pretty sure my confidence level on the leaps is very firm. Like I think if anything, we could get a rally upwards of like 350 even. So even if I mean, I got 220. It's basically I bought at 220 and 230, right? Those are my at the money strikes, and those are leaps, by the way. If we rally to like 350, man, I'd be happy. I mean, if we make it 100% retracement up here, which is not likely for now, right? Until we get over 400. But I just know my areas to take profit, right? You could take profit, the super conservative profit would be okay. Take some at the 200-day moving average because we can slip lower. We can still slip lower, folks. That's something that you want to, understand and pay attention to. But then, in terms of like the fee retracement, right? Depending on how strong of a consensus Tesla is, I think we at the very least make it to 38.2% right here. So that's a nice bounce because I mean, at 250, we're talking 321. That's a fat, piece of meat to capture right there, if you want to capture it, right? So yeah. Okay, let me sip on some coffee. And let's address some of these questions. So JL says, also any forecast on China and European markets? European markets held up well, I noticed. And China markets I actually like right now as well. I think an interesting trade that's setting up well is Alibaba, right? Alibaba over 145, that thing can really run. So anticipate that. Of course, I mean, it's not the best ideal market condition, but I'm seeing Alibaba over 145 as a nice spot. I'll show you guys that as well. Again, like there's the Alibaba trade is different from the trade that I'm showing you right here on Tesla, right? So on Alibaba, let's pull that up. Right, we pull up Alibaba over here. Baidu, yeah, I mean the whole EM segment. And hey, John, I still owe you a response. My apologies, I got a little bit busy. Um, but yeah, I owe you a response on LinkedIn. We got to book that time. Yeah, so Alibaba right here, I got my arrow. All right, this is the alert right here. Over 145, and this thing could run. That's just how it is, folks. Like, over 145 is just like the trigger to the rest of the marketplace. Like, hey, it has the intent of going higher. So that's when we're going to just drive the capital in. That's how the institutions kind of work. So that's the line right there. That is a trade idea that I plan to issue later this week or tonight's report. But we got to go over all the exciting things that I want to share with you all today. Okay, so at a high level, what I'm going to share today is we're going to talk about the markets, the current condition of the markets. Then we're going to talk about this fantastic Redpoint Ventures report right here, 2025, because well, if I could equip you folks with elite analysis by a top tier VC, why not, right? Wouldn't you guys want to know what top tier VCs are thinking? So we're going to be going over this report, and then I'm going to dive into CoreWeave over here, which is the official S1 right here. This one's pretty interesting because we know NVIDIA is invested into this. Interesting fact, if I could just give you guys a little bit of information right here, this is how much NVIDIA is invested into this company. So if you don't know about this company, it's a very important company because it's strategic in terms of like what it's doing. Essentially, my understanding is the GPU cloud. Oh, I'm lagging because I'm zooming in, but give me 1 second here. Essentially, it's like a GPU cloud, but you can see NVIDIA right here owns 6% of it, right? And then total voting power before this offering 1.1. So shares owned before this offering was 6% right there. So NVIDIA's got interest in this, this smaller company, but you can see who the big player is here. It's this person right here, Magnetar Financial LLC.